For the past few months, the market has been crashing quite hard, and one of the companies on my watch list has been crashing with it. And this company is AMT, or American Tower Corporation, which is currently trading at $185.62 and is down by almost 10% over the past 6 months. Now, to value this company and figure out its intrinsic value, we'll jump over to my REIT valuation spreadsheet, where we'll plug in the ticker symbol AMT and use the 9-pair analysis to analyze the historical fundamentals of the company and figure out its intrinsic value using three valuation methods: the historical price to FFO model, the multiples valuation model, and the dividend discount model. And as always, if you'd like to download these spreadsheets, you can do so at my Patreon in the link in the description. But now let's jump to the stock screener and have a look at AMT. So first of all, we can see that the company does pay out a dividend, a starting dividend yield of almost 3.5% with a dividend payout of $6.5 per share per year and a trailing FFO payout ratio of 54%. Now with AMT, we're going to use the FFO payout ratio instead of the free cash flow payout ratio, as AMT is a REIT. And for REITs, it is much more accurate to use the FFO instead of the free cash flow. Now we can also see that the analysts have a target price of $219 per share by the end of the year, and the company has a high institutional ownership, sitting at almost 95%, which is great. Now let's jump to the 9-pair analysis. And the first thing we can see is that the 5-year price over FFO is sitting at 22.12, should be sitting below 22.5, so that is in the green. It means that you will be paying a fair price for the company compared to the FFO they earn per share. We can also see that the revenue is growing and the FFO is growing as well, but the net income has decreased slightly over the past 5 years. Now the company is also selling out shares, which I don't really like when a company does when it is trading at a lower price than its historical average price. And we can also see that their total liabilities over their 5-year FFO negative dividends is sitting rather high at 5.77. Now if we scroll down to the financials, we can see that the price to FFO has actually been rising over the past 5 years, rising from about 15.51 to 25.21 in 2023, which is not a great thing, but it's completely expected for the situation the overall market was in over the past 5 years. Now the gross profit margin is staying fairly stable, as it should be with any mature company. If we scroll further down, we can see that the revenue has been growing, the net income has been decreasing, and the shares outstanding are increasing slightly. Though the three metrics I really want to have a look at are the funds from operations, the total liabilities, and the quarterly dividend. We can see that the quarterly dividend has increased by almost 60% over the past 5 years, and the total liabilities have increased by almost 20 billion. And if we scroll a little up, we can see that the funds from operations have increased as well, but by only about 2 billion. Now the total liabilities and the quarterly dividend is increasing at a rate that isn't supported by the increase of the FFO, which essentially means that the trailing FFO payout ratio will be getting higher if AMT keeps up this trend, as it could potentially lead to dividend cuts in the future. But let's jump to calculating AMT's intrinsic value. So first let's jump to our historical price to FFO model. And here we will take the historical price per share and the historical FFO per share, and using these two metrics we will calculate the historical price to FFO. Now we will compare that to the current metrics, so to the current price to FFO, and if the current price to FFO is lower than the historical price to FFO, that is the average historical price to FFO, the company would be considered undervalued. So now we will divide the historical average price to FFO by the current price to FFO, and we will get a decimal, which we will multiply by the current price of the company and get the intrinsic value to be sitting at $215.94, which basically means that compared to its historical price to FFO, the company is currently undervalued. Now let's jump to the multiples valuation model. And here I will compare AMT to CCI, SBAC, and EQIX, which are REITs which operate with telecommunication towers and data centers. Now we will take these companies' stock prices and their FFOs and calculate their price to FFOs, which we will average out, and similarly to our historical price to FFO model, we will divide by the price to FFO of AMT, and we will get our intrinsic value by multiplying the decimal with the current price of AMT. And we can see that this intrinsic value comes out to be $186.22, only about $1 higher than the current trading price of American Tower Corporation, showing that at the current time the company is fairly valued compared to its peers. Now moving to our final valuation model, the dividend discount model. And here we will take the dividend payout over the past 5 years and calculate the average growth rate to be sitting at 12.27%. Now based on the data from our 9-pillar analysis, I want to be quite conservative with predicting the projected growth rate. Though if we jump to Seeking Alpha and have a look at the 10-year historical dividend growth chart, we can see that they have been increasing their dividends quite steadily actually. So based on the data I have, I will predict a growth rate of 7% every single year. Now because the dividend discount model doesn't work when the projected growth rate is higher than the current WACC of the company, we will have to use our alternative dividend discount model, which takes the next year's dividend, the stock price next year predicted by analysts, and the WACC of the company, and calculates the intrinsic value to be sitting at $227.02. Now moving to our final ultimate valuation, we will average out the 3 valuations we just did. We will switch the dividend discount model to our alternative dividend discount model, and we will get an intrinsic value of $209.73, which is 13.19% different to the current trading price. Now what I forgot to do, and you guys have to be careful to not do this mistake when using the valuation spreadsheets, I forgot to switch the yearly dividend frequency from 12 to 4 as AMT pays out their dividends quarterly. So when switching this, we can see that the intrinsic value goes down slightly. Now going back to the ultimate valuation, we can see that the intrinsic value comes down to $205.29, 10.67% higher than the current trading price. And if we plug in a margin of safety of 15%, we would get an acceptable buy price at $174.50. Now if we have a look back at our chart, we can see that AMT has actually been trading even lower than that just about a month ago. Now it is true that AMT is trading at much lower values than what it was trading over the past 5 years, and therefore I do think that it is a good idea to keep the company on your radar. With that, if you did enjoy the video, make sure to check out my Patreon, make sure to leave a like and subscribe as it really helps me out. Also make sure to leave a comment and let me know which company you'd like me to evaluate next.